We're 29. All right, well, good afternoon. I take the opportunity to welcome you today on this Sunday afternoon, and I'm very thankful that you're joining us on this wonderful opportunity to become part of the CFA Research Challenge team. My name is Mohsen Saad, and I'm a professor of finance originally. I'm trained also in finance, clearly. And I currently serve as the Associate Dean at the School of Business Administration at the American University of Sharjah. Uh, I have built my career being in academia, and that made me excited to serve on the board as the chair of the university board subcommittee. In it, I am mostly responsible for fostering relationships between the institute and the different universities. Oftentimes, it is the bridge between what seems to be theoretical and not so much connected to the industry and what is actually being done in the practice. The gap seems to be widening at times, and my role is to be able to work between two entities that work with each other and oftentimes fail to speak directly to each other. So I work on matters such as integrating curriculum, integrating CFA materials into academic curriculum, helping universities administer seminars, webinars, and different kinds of activities by practitioners in the fields on topics that are timely, for example, ESG, and other topics that are always important, such as ethics. But what seems to me the dearest activity to my heart is this activity, the reason why we're meeting today, which is the research challenge. The research challenge is an event that I like above every other one because it ends with a celebratory nature. It ends such that those who are the best are celebrated, and they have the opportunity to show how good we are, how great we are, not to everyone who's around us, but actually beyond to the region. And if we are actually really great, we can go beyond the region to go to different continents, to Europe and to United States. It pretty much is a situation whereby if you're talented, it's an opportunity to shine. It's an opportunity to show the world how good we are. And whether it's our academics or whether it's your smartness or your support system or us, all of us together as a system, as a team, we reinforce each other so that we end up with a great output to be able to tell the world what a great type of students we have and what kind of a great research we are able to make. The research challenge is an intercollegiate competition. Uh, and it is where universities in the region they send the best students so that they are able to compete in an environment that is fair, transparent, and rewarding for those who are good. Normally speaking, at a minimum, there must be more than 3 universities before the competition is actually started. But we have more than that. Each university submits a team, and they're allowed to submit more, perhaps two, and each team consists between 3 to 5 students. Now, clearly, what we're trying to achieve is an in-depth equity valuation of a company to an extent that surpasses a standard level. What we're looking for is a standard that is competitive, that is high, and that stands to international levels. The competition is quite unique because it promotes best practices, it promotes research skills, it puts different skills together. You have to be able to research, you have to be able to analyze, you have to be able to have a critical mind, but more so, you have to be able to write and to be able to communicate your ideas in writing in a clear way so that the graders and the judges are able to understand what you're saying. But then in top of all of that, it puts everything together in a setting where where you have to present. So it really is a lot of skills together. I would put skills under knowledge and then knowledge and communication skills. And of course, all of this is applied in a financial setting. But what makes it unique is perhaps what the competition is not. It is not a competition based on performance of that particular stock or of that particular portfolio. So in that sense, it doesn't promote short-termism in the sense that we wish to have a short-term outcome at the expense of long-term ones. The competition, however, does promote how to conduct research ethically, and how to analyze data. So that's actually a very interesting side of it, because you will be able to analyze data and to be able to develop recommendations. And then, like I said, to be able to present and defend recommendations in a professional manner. The agenda that we are facing today is actually shown in the bullets here. So if you look at it, you will see that there are introductory remarks by me, and those are what I have done. And then after, there is a speech by the president of the CFA Society Emirates, Mr. Ziad Zain. And then after that, we are going to talk about the research challenge, and I will be introducing Mr. Mark Jadallah. We'll talk about the available resources, universities, mentors, the deadlines, the subject company, and then few recommendations and suggestions to you on the things that you do and you don't, and then the next steps and what the schedule would look like. Without further ado, I take the opportunity to welcome the president of the CFA Society, Mr. Ziad Zain. But before I do, I would want to say that I have known Mr. Ziad for at least a year now, in which I have seen the highest level of professional qualifications in one individual that comes in a very friendly way. Mr. Ziad, I'm very happy to introduce you for your speech. Thank you.
Well, thank you so much, Dr. Mahsen, for your kind words and the introduction. I can't say, but likewise, it's been a great journey so far for all of us at the CFA Society leadership here in the Emirates, and the combination of the team, how we came together, and whatever value we are bringing to our members. It is something of pride to all of us here at the society. Thank you to our audience and our future analysts, I would say. It shows like the kind of dedication to get everyone on board on a Sunday afternoon. I look forward to a great competition, and I hope that you guys would enjoy it and benefit from the experience and the exposure that it will give you. Dr. Mohsen said it well about the importance of this competition, about the research challenge. The research and the analysis are the key themes of the CFA programs. They are at the heart of each and every step of the curriculum as you go within the studies and how you progress towards your CFA charter, if you wish to undertake it on it. For us as a CFA society here in the Emirates, we are an association of members. We are the local chapter of the CFA Institute. We currently count almost 1,000 members, all in the finance and the investment profession. They are mostly charter holder and based here in the UAE. Our members are bonded by the highest ethical standards and qualifications. They are scattered across the industry. They hold key positions and they drive its growth and development. Our mission and statements, or whatever we strive to do here at the CFA Society Emirates, is to promote the ethical and professional standards. We encourage professional development by pursuing specifically the CFA program. We facilitate the exchange of information among our peers, among members, among the industry professionals, and we work to expand the public's understanding of the CFA designation and the investment industry. I will not take a lot of your time. I know we're on a tight schedule and you are eager to get things started and probably carry on with your days. I'll just give you a small brief of whatever we do here at the society, how engaged we are with our members. Our membership are scattered, as I said, and they are so diversified. We have from the new joiners up to the MD and the CEO. So we try to engage each and every them by having like targeted events specifically to inside the thinking or the knowledge delivery to each and every cluster of, let's say, of members. But in addition to these specific events that foster the career development, the skill, the soft skills, everything that comes along for the prosperity and the development of the members, we have these big events that we do. We have, for example, the event that we took care early last week, which was the MENA Investment Congress. It's the flagship event of our CFA Society Emirates, whereby we gathered the industry professionals and delivered on whatever we see as the conclusion of interesting year, how things have evolved in the market. And we complement this early at the beginning of the year by doing the forecast dinner, how things also are forecasted. What do we see in terms of development, in terms of economy of trends for the year further to come. This was just a glimpse of the CFA Society Emirates. I will, as I said, I will not talk a lot about it. I can go for almost the full hour speaking about what we've been doing and how engaged it is, the experience so far. But I will give it back to Dr. Mohsen to just carry on with the agenda as prescribed and to get you onboarded for us to start this healthy competition that we look forward to its result. And maybe Dr. Mohsen also can say a few words about how we are doing a MENA research challenge on the side of the general competition. So this is another part of us as a MENA region, how we can always just come together and bond our relation. I wish you all the best of luck and let the game begin.
Yes, sir. Thank you so much. As always, thank you. And yes, you're right. In addition to the official, the CFA Institute Research Challenge, as a society, we have taken another initiative. We call it similar name, MENA Research Challenge. But for that, which is the same participants, but that would be like my surprise for you. Once we get started, I'm going to give you all the details about it. But again, it's an opportunity to celebrate you and to get to know you so much better. It's another platform for you to develop your skills and knowledge. What after this is the details about the research challenge. For that, we would be given those by Mr. Mark Jadallah. But let me say a few things. Mark is a CFA charter holder, is the assistant vice president at Lighthouse Canton. It's a multi-family office with $3.5 billion assets under management. Mark has been volunteering with the CFA Society Emirates for 3 years now as the project manager of the CFA Research Challenge in the UAE. It's one thing to do what you have to do because it's your job. It's another thing to volunteer. It's with the deepest respect and appreciation that I welcome Mark for us, because he's putting this time purely out of his volunteeringness towards the society and the community. Thank you so much. Without further ado, please, Mr. Mark, have the floor. The floor is
Thank you
yours.
so much, Dr. Mohsen, for this very humbling introduction. And thank you so much, Mr. Ziad, for sparing us a few minutes of your time today. On behalf of CFA Society Emirates, I'd like to welcome all the participants and all the universities to our kickoff meeting today. I have to say, after managing the CFA Research Challenge project in the UAE for 3 years, nothing as far as a recent graduate from the American University of Sharjah creates more excitement for me than knowing that we're actually trying as much as possible to push some value towards the students, give back towards that community to which we're all coming from, in order for students to get one step closer to their dreams as far as their careers are concerned. So just to recap very quickly on what Dr. Mohsen has mentioned as far as what is the research challenge. I'm sure many of you would know by now, but it doesn't hurt to give you this 1 or 2 minute recap. So the CFA Institute Research Challenge is a global competition. It has multiple stages, but first it starts with each local chapter or society within each of the respective countries and region. And hence it is strictly organized by volunteers that are participating with the CFA Society Emirates for the research challenge, among other projects as well. Winners from this local competition advance to one of the 3 regional competitions, and finally, should they prove themselves successful, they proceed to the global final. Just to recap on the rules, each university, in our case in the United Arab Emirates, will send 1 or 2 teams. Each team will include 3 to 5 team members. The unique opportunity here is that each team will get to be allocated one of the industry mentors who are investment professionals that are mostly CFA charter holders, and they may have or hold other professional qualifications as well. But more importantly, they are in the industry. They are veterans. They have been doing this for quite a while, and they can allow students to get a glimpse of what it's like to connect their theoretical learnings from the classroom to the practical experience of the real world. Each of the students on the local final competition day, and that is the presentation day, will get to present their findings and their recommendations, defend their recommendations, and answer some questions to a high profile of judges. These could be heads of research, portfolio managers, CIOs, working with some of the top global firms across the world. Again, how it goes is you will have three sub-regional competitions. You will have the Americas, the Asia Pacific, the MEA, and eventually each of those will send its winners to the global competition. But allow me to go back to a very important slide. I firmly believe that we invest our time and energy where our incentives are mostly lying, right? And so it's important to answer the biggest question: why should students or universities participate in the research challenge? And before we answer this question, let's agree on one fact. It is a lot harder nowadays to get a high profile job in the industry than it ever was, whether 5 years ago, 10 years ago, 20 years ago. On top of that, you have economic conditions such as rising inflation, which require hiking of interest rates, and that would eventually lead to higher unemployment, as in firms laying off their talent. And we've already seen that happening with the top tech firms such as Facebook, which is now called Meta, Google, and Amazon as well. And so we need to understand that this is a tight job market. So having just a bachelor's degree may not be enough anymore. And we need to get out of our regular circle of offerings, so to speak, and embark upon the largest amount of extracurricular activities so that we either become outstanding or at the very least stand out as far as hiring managers or recruiters are concerned. So let me start off by saying that the CFA Research Challenge, one, allows you to hold the CFA brand on your resume. And that is a very important point. In all my interviews or my hiring experiences or in my recruitment experiences, the CFA is the #1 brand, or I'd say that one of the top 3 points that were highlighted to me by hiring managers or recruiters. So as far as branding exercises and investments are concerned, the CFA does a fantastic job in investing in their marketing and branding agenda. So having the CFA on your resume is a great plus. That's #1. #2, you now get to have a practical experience that is the equivalent of an internship that you may not necessarily find it easy to get or to be a part of. And so having this practical experience offers you a lot of talking points and a lot of proof, because if you prepare a financial model as part of the research challenge, that is something you can showcase to your hiring manager. And so being part of that experience offers you a greater chance to stand out as a candidate. So that's #2. #3, as part of being part of the research challenge, you get to learn, as Dr. Mohsen rightly pointed out, a lot of skills. One being research, one being analysis, third being financial modeling, fourth being presentation and how to prepare an equity research report, a formal equity research report. And these are all parts and cogs of the bigger CFA program machine. And so when you sign up for your CFA level 1, it makes it a lot easier to study the content and the curriculum of the CFA level 1 program and increase your probability of passing and moving on to level 2, which is the next stage. 4, which is a very important point, as I've mentioned, industry mentors are allocated to each of the respective teams that participate in the CFA Research Challenge in the UAE. And so getting access to one of these mentors, who could be a senior vice president, an equity research analyst, a CIO, a CEO, is not an easy task. And to have this access and to get the opportunity to be mentored and collaborate with such high caliber industry professional is a very scarce and unique opportunity. And I believe that's one of the top added values as far as the research challenge is concerned. Finally, you get to have access to quality learning resources, past, you name it, past equity research reports published or delivered by the winners of previous competitions. You have access to Refinitiv, that is the equivalent of Bloomberg. I'm sure you've been using this as part of your bachelor's degree or as part of your undergrad program. And that too is a plus point whenever you're interviewing, because when hiring managers want to hire, they bring someone who has basically the least or follows the law of least resistance, someone who can just be hired to plug and play, use the softwares and deliver right away. And that gets you one step closer to that. So in a brief, these are the benefits of the research challenge. Just to give you a recap on how massive the research challenge is, this data is updated as of 2022. We have 6,400 plus students, 3,000 plus volunteers, 150 plus societies, where for the most part, each society represents a major financial hub or a country. You have 1,000 plus universities, 119 local challenges, out of which the United Arab Emirates challenge is a part of, and 90 countries. Again, just a recap of the previous results of the last season. You had 5 regional champions: University of Sydney, IE Business School, Polytechnic University of Milan, Northern Illinois University, University of British Columbia, and the global champions were Northern Illinois University, representing CFA Society Chicago. I believe we've covered this as well. We fall under the Middle East North Africa region at CFA Society Emirates. Once the local winners are announced, you'll be proceeding to the sub-regional levels. And from the sub-regional levels, you proceed to the regional semifinals in April, and then to the regional finals in April or May. And should you prove successful, you'll proceed to the global final in May 2023, where this will be the final stage. A glimpse of the available resources available to you as part of your research challenge. You'll have previous reports and presentations of global winners. And this is a good opportunity to study what did the winners do, what deliverables or quality of performance did they have to win their respective stage or the global competition. 2, you have access to Refinitiv Workspace, as discussed earlier. You have technical trainings. We'll be covering that. Basically, we are arranging 3 trainings for you, plus the already recorded trainings, so that you get a solid grip on what are the necessary skill sets that would be required to increase your chances of success. Will be available to you basically 24/7 in case you have any questions on WhatsApp or email, and that would be it. Our universities and mentors for this year would be as follows. American University in Dubai would be mentored by Jagdish Bataija. He's a CFA doctor holder and a senior vice president at Lazard Capital. American University of Sharjah, mentored by Yap Mayer, who's a CFA charter holder, managing director and head of research at Arqam Capital. Higher College of Technologies in Abu Dhabi will be mentored by Bhupali Gursail, a CFA charter holder, and a Kaya charter holder, who is a fixed income investment manager at National Bonds. Higher College of Technologies in Dubai, who will be mentored by Karan Mahajan, who is a Kaya charter holder and an investment manager at Q Holding. Harriet Watt University, who will be mentored by Ali Wadood, a CFA charter holder and an investment banking at Mwalis and Company. Middlesex University, Dubai, will be mentored by Yusuf Salem, CFA charter holder and CFO at the recently publicly listed Swivel. And finally, University of Wollongong, Dubai, will be mentored by Shiv Mehta, a CFA charter holder, a finance trainer at Kaplan Professional Middle East, and an ex-equity research analyst. To give you an idea about these deadlines, just FYI, this presentation will be forwarded to you after the kickoff meeting is over in a PDF format, just for your reference. We are hosting currently the kickoff meeting today on the 27th of November. Today, we will be also having Mr. Azjad Yahya to present a presentation on the subject company for the season, after which you'll be given a period of roughly 3 weeks to prepare a list of questions. We'll limit the amount of questions, of course, and we'll filter that before we send it to the subject company, who will be kind enough to take some time and address these questions for you. And that should help you basically get a little bit of a closer idea on the business model or the expected earnings of the subject company. And then you'll have the first draft due of your written report on the 22nd of January, 2023, the final report due for grading on the 12th of February, 2023, the final presentation day where you'll be delivering your findings and recommendations to a panel of judges will be taking place on the 26th of February 2023, 2 weeks exactly after you submit your final written report. Should you prove successful, should you win the local final, you proceed to the sub-regional finals of the EMEA, that is Europe, Middle East, and Africa, on March 2023. The exact date will be disclosed at a later stage. Should you prove successful on that stage, you proceed to the regional semifinals that discussed, and then consequently regional finals, and finally the global final. So basically, we thought it would be a good idea to prepare a suggested timeline for you, how you should perceive or organize your working schedule or strategy for the research challenge. So today we have the kickoff meeting and subject company presentation. As mentioned, on the 18th of December, you'll be submitting the Q&A, your list of questions, which we will take forward to the subject company's investor relations team. Of course, it goes without saying that the list of questions cannot include any questions that are basically implicit or explicitly asking for non-material, non-public information. In that period, from the 27th to the 8th of Jan, this is where you have two important stages, and that is your preparation and drafting period. You'll be having roughly 6 weeks to gather, analyze, model, and evaluate the subject company data. In tandem, you should be drafting each specific section. And here it's important to highlight that a lot of the work required for the CFA Research Challenge should ideally be done in parallel as opposed to done in a consequential manner. And that would create a lot of efficiency in your working schedule, given that, of course, you have other university-related, undergrad-related courses and exams that you're taking care of. So it's very important that there is a clear and concise division of labor and a clear and concise plan as to what will be done by whom and when. In that same period, you'll be having the compilation and revision period, 2 weeks to compile all the data, charts, analysis, and commentary for all the sections. And we'll discuss what are the sections that will be included in the report at the end of the presentation. In parallel, you should revise the report for any structural errors, formatting errors, and cohesiveness. On the 22nd of Jan, this is where the report due to your mentor should be submitted. You'll have 3 weeks to incorporate any feedback or comments or revision that has been suggested by your mentor or faculty advisor, i.e. your professor. In parallel, please start drafting your PowerPoint. As mentioned, the work should be done in parallel, not in consequence. On the 12th of February, this is where you'll submit your written report, your final written report. You'll have 2 weeks to finalize your PowerPoint and rehearse for the presentation. And more importantly, you'll need to rehearse and prepare for the Q&A session, whereby the judges will be asking you questions related to your findings and recommendations. On the 26th of Feb, you will have the final presentation day. This is where you demonstrate your reports, thought process, rationale of how you have reached your final recommendations. Now, without further ado, allow me to take this opportunity to announce the subject company for the season. That is APA, Abu Dhabi National Energy Company. In the past, we have had the subject company presentation and the kickoff meeting done on 2 separate days, but we thought it would be a lot more efficient for the teams to have that done simultaneously to kick off the respective research journey right away. That being said, we would like to take this opportunity to introduce Mr. Asjad Yahya, who is a vice president in the investor relations team of APA, who has been very kind enough to be with us today and deliver a presentation on who TAPA is, their business model, and their performance for the current year. Mr. Asjad Yahya is also a CFA charter holder who has been on the equity research guide as well. Mr. Asjad, thank you so much for being with us today. The mic is yours, sir.
My pleasure, Mark. Thank you. Mark's already introduced me, but just to give you guys a little bit of a quick introduction, I've been in the UAE since 2006. Been through a mix of buy side, sell side, and investor relations roles. And I joined TAQA very recently, a little over a month ago, to head their investor relations as well. So with that little introduction, let's get into the actual slides. If you could just jump to the next slide, please, Mark. So TAQA is one of the largest integrated utilities in the region. A few quick highlights from the slide. The company is currently valued at about a market cap of about over 100 billion, close to 120 billion dollars. That, to put things into perspective, that basically makes the company the 3rd largest listed stock in the GCC today, behind Aramco and IHC. In terms of actual business, we currently have about 24 gigawatts of power generation capacity. We announced, you will be able to find online, both on our website and on the stock market announcements of our strategy that was announced in 2021. Under that strategy, we're looking to nearly double the capacity from 24 gigawatts, 25 gigawatts roughly to 50, of which 30 will be in the UAE, and another 20 will be in international markets by 2030. From a perspective of water and electricity networks, we're over 100,000 kilometers of network, another 1,000 MIGD of gross water desalination. We also have bonds issued in the market. So we currently have 10 bonds outstanding with the value of about $7.5 billion. This makes us one of the more prominent issuers in the market, also by virtue of, sorry, just go back to the slide, please. So also by virtue of having the ownership. So what you will see in a little bit is that we have a very strong cash flow profile, which gives us a very strong rating related to a bond as a bond issuer. But on top of it, we are majority owned by the Abu Dhabi government, ADQ in particular, which owns about 90%. By virtue of that, we are ranked just 1 notch below the Abu Dhabi government in terms of our credit rating. Next slide, please. So we have 3 business lines. We have power generation. We have transmission and distribution. So transmission and distribution is considered one line, although naturally it's two components coming together. And then we have an oil and gas business, which is entirely outside the UAE. I'll run through some of the details on it in a little bit. From a perspective of contribution to the top and bottom line, the transmission and distribution business is the most significant component. Roughly about half of our EBITDA came from transmission and distribution last year. Just to give you take a step back and give you a little bit of introduction to TAQA. So TAQA has been listed in the stock market for quite a while, but what you will see from our history is that TAQA was owning a significant stake, 40% at the time, in all power plants in Abu Dhabi or Abu Dhabi supported power plants. There was a merger that happened or reverse merger, I should say, between AD Power and TAQA 2 years ago. That's what brought the current entity into shape. The oil and gas business was there in the listed entity, so that came along with the reverse merger as well in terms of it. So when you guys are doing your homework, the first thing for you to start off would be to look at the details of the reverse merger, I would say, probably because that essentially is the start of the new TAQA, so to speak. From a perspective of coming back to the breakdown, so we, as I said, roughly half is transmission and distribution. The remainder is depending on where the oil and gas prices are, you could have a higher or lower contribution coming in from the oil and gas. Next slide, please. This slide gives you one of the most prominent aspects of TAQA. Nearly 80%, actually, as far as last year was concerned, over 80% of our revenues were coming in from what we call contracted and regulated revenues. Now, what do I mean by that? So if you take the generation business, that business by nature is done on the basis of long-term power purchase agreements. Our counterparties almost always are government. In the UAE, for sure, they are government. In the international markets, they will often be government as well. So you sign very long-term contracts, which essentially guarantee you a built-in return on equity based on the assumptions that have come in, and then they pass on to your costs as well. So those make cash flows very visible on the generation side. On the T&D side, it's an interesting model. What happens is that we invest a particular amount, which currently stands about close to the invested amount stands close to about $20 billion roughly. These are what we call regulated assets or regulated asset base. On that regulated asset base, we receive what is called a maximum allowed revenue from the government. This, in essence, is guaranteed revenue coming in from the government, including a return on equity component, both a real return on equity component and along with it the CPI that we get based on the previous year's CPI. So essentially our return on equity becomes the real return which we've negotiated with the government. Currently stands at about 4.6%. It is in process of negotiation. So what we call the first one was set under what is called the RC1 term, which was a 4-year term, which is coming to an end by the end of this year. We are in negotiations for what we call RC2, which will determine. So you need to keep an eye out for your research challenge. You need to keep an eye out on details of RC2 as they come out, because they will in essence determine the revenues and the return that TAQA will get over the next 4 years from the government. So what is happening is that in essence, both through the power purchase agreements and through the maximum allowed revenue, there are set returns on equity that are being built into our business lines. We have very clear visibility on how revenues are going to be generated. Very important aspect to highlight is that in the UAE, both on the T&D side and the generation side, we get paid on availability rather than on uptake. So what you will find in other markets is that you will have the revenues linked to what percentage of electricity or water capacity has been acquired or purchased by the client. In our case, that is not so. We are paid on the basis of availability. So, which is why, again, when you look at our announcements, you will always find commentary on availability for both power and water generation, as well as availability on the T&D side. Oil and gas, we're close to about 125, roughly 1,000 barrels of oil per day. We are spread across 3 markets. We have the UK side, North Sea, which is actually in wind down phase. So that business is at very mature assets, which are in process moving towards decommissioning, essentially, or the rigs essentially, etc., will be decommissioned as well. Then we have Canadian side, which is quite heavy on the gas side. And then we have assets in Iraq, which are more oil-centric assets. You can jump to the next slide, please. So I alluded to the strategy that we put out in 2021. This slide gives you a bit more detail about it. So essentially, you're looking at 4 key legs coming in. First and foremost, in line with what the UAE government has committed to, we are looking to become a low carbon power and water leader in the utility space. Naturally, being a utility, so most of our plants today are thermal generated. And we have a couple of coal-fired plants as well. One is in Morocco, one is in India. Indian one is quite small. But in essence, green is a relatively smaller portion of our portfolio. We have committed to a net zero by 2050, in line with what the UAE government has committed to. We have also announced a more detailed. Again, you will find this both on our website and on the Abu Dhabi stock market. We've also announced a more detailed stepped plan for 2030 until 2030 in terms of how we want to move through the milestones towards the 2050 plan. So by 2030, what we intend to do is increase the component of green generation to over 30% in our portfolio. We are very confident of being able to do this. The reason being because we are looking at decommissioning of existing thermal plants as they come to end of life. So the power purchase agreements over the course, several power purchase agreements over the course of the next 8, 9, 10 years will be coming to an end. Instead of renewing them, we will be shifting those plants, decommissioning those plants, and moving towards solar plants and reverse osmosis for water generation. So this is a very key theme that you will find. In fact, as you will learn that the world that you're entering into, ESG, are becoming 3 extremely important letters that you will need to keep an eye out for almost everywhere that you go, especially on the debt side, on the credit side. This is almost becoming a necessity where you need to comply with ESG requirements. You need to be improving your ESG profile. ESG stands for environment, social, governance. I'll go through these in a bit more detail, probably in the next few slides, but just to introduce them. So you have this ESG framework, what they call environment, social, governance. Essentially, you're looking at what kind of carbon footprint you have on the environment. What steps are you taking? Social covers areas such as employee betterment, what your CSR activities, etc. And G is, of course, governance, where they're looking to see anything and everything from how independent is your board to what kind of checks do you have in place for protection of minority shareholders and so on. So coming back to our strategy, so the first step is going to be looking at moving towards higher and higher green power generation. Second is growth in the UAE and internationally. These are the numbers I'm about to say are going to be important from your modeling perspective. We have committed to spending about $11 billion by 2030 on our T&D market. Sorry, guys, I apologize. I've been having a little trouble with my car, so I had it picked up. The guy who picked it up is just calling me, so I need 2 seconds to just speak to him.
All right, sir. That's fine. So let's give our gentleman a minute until he's back with us. In the meantime, if you have any questions that you would like us to address, it's a good time to start putting them in the chat box. And the way we will handle this is we will go through our presentation and then address the questions in the chat, in the meeting chat. Thank you. It's a good time to start putting the questions. We already received one question from Ahmed. Thank you, Ahmed, for asking. Others, if you have it's a good time to put your questions through.
Hi, sorry about that. I do apologize. I may have to take another short break in between as well. Again, it was just bad timing. I was trying to get my car picked up from the home, and they just literally clashed with when the presentation started. So I apologize for that.
No worries. Please go
So,
ahead.
so coming back, so we have committed to spending about $11 billion by 2030 on our T&D business. This will add to our regulated asset base. So what you will find is that our current regulated asset base is depreciating. So that has to be replaced by additional investments. This is naturally because of the growth in the UAE, as well as a move towards automation and so on. So these you will find. The other is that we're looking at expanding capacity both in the UAE and as well as internationally in the generation space. That's another roughly about $1 billion to $1.5 billion dirhams spend coming through every year over the next several years until 2030. So from a modeling perspective, from a capex perspective, we are looking at about roughly 4 billion dirhams a year on the T&D side, and about $1 billion, $1.5 billion dirham on the generation side. Keep in mind, we haven't been running at that pace just yet, but we do anticipate that we will be increasing our capex spend in the coming years. Again, from a modeling standpoint, obviously important components. Sorry, guys, I just need 2 more minutes. I, again, really do apologize for this.
Okay, not a problem. Again, we do have one question. Since it is 2 minutes, we might as well answer the question. Mr. Mark, do you want to take a
Sure.
shot at it?
No worries. So I see one question that is, what is the data collection process going to be like, right? The data collection process, you basically rely on one of few sources, actually more than one. First is the Refinitiv workspace, which the CFA Institute is going to be providing you access for. I believe after you complete your registration for your team, you'll be receiving an email from the Institute with regards to the subscription or the logging in process. So Refinitiv is basically, as I mentioned, the equivalent of Bloomberg, and these are quote unquote the Google of finance. You can look for as much data as you want there, and that would serve as your raw material, right? That will feed into your modeling or your equity research report dissection. That's one. 2, then you'll have to go through the financial statements of the subject company, and that is very easily available. And I believe right now you'll have the latest quarterly earnings released on the company's website, so keep an eye out on that. Once you go through the company's website and the historical data, then what you can do is go through this presentation. I'm sure it's going to add a lot of value into how the firm looks at its own business model, as opposed to how you look at it as an external party. Once that is done, and if you still have any questions, you can present it to us before the 18th of December, and that will be filtered out and sent to Mr. Asjad or the investor relations team. I hope I've answered this question. Allow me to get back to Mr. Asjad's presentation. Sir Asjad, please go ahead.
Yeah, thank you very much. So coming back to the slide. So beyond that, what we're looking at is driving efficiency, trying to improve operating expenses. I think if you look at this year, the 9 months results we've put out till now, they will give you a good sense that we've had a very strict control on costs below the EBITDA line, which actually in turn was instrumental in us having a very high jump in net income come through. Of course, the oil and gas business was driving it. Nonetheless, you will continue to see that happen more and more. Beyond that, what we're looking to do is we currently are essentially investors in generation assets. What we're looking to do is develop. The ability to also lead plant development. So for that, we're looking to do acquire more and more O&M experience. This might not necessarily be as important for you from a strict modeling perspective, especially given that without guidance, you wouldn't really be able to figure out where we might have the O&M capacity. But it's an important aspect to keep in mind from the perspective of the outlook for the company, because it does two things. One, it does improve the returns profile over the longer term. And at the same time, it also helps based on. Okay, I just saw one question. I'll cover that in a minute. So coming back to what I was saying. So from an O&M side, we would be looking to expand on also our ability to bid for projects, essentially as a lead developer, which it both improves the prospects of which projects we can get into, especially as we start breaking into international markets more and more. And at the same time, the kind of return profile that we would get a boost as well. Coming back to the question I just saw on availability. So what happens is, what you will find if you look up our financials is that you will find we are often talking about availability north of 99%, and you'll see very high availability come through. What that does is, as long as we're above the minimum mandated availability, we get paid in full for the capacity that's coming through. So we're not as you would imagine, for example, that in summers there's higher use of electricity as well as water, and then during winters you've got lesser use. Electricity tends to be more volatile than water, but nonetheless a little bit of volatility you would find in both cases. We're not as worried about it, unlike other power generation companies, which would be in essence paid for what is being taken up by their end user. In our case, as long as we're making sure that we're running at a high efficiency, the government will continue to pay us in full on the agreed PPA and agreed MAR on the T&D side, which is why what you'll see is that our revenues tend to be relatively stable, barring any new project additions or any project decommissioning on the generation side. And similarly on the T&D side, you will find that we're a fairly stable revenue and EBITDA company from that business line. Okay. Last but not least, coming back to the slide, sorry, just go back to the slide. Last thing to cover is we've committed to, so as I mentioned to you, that we are rated just one notch below the Abu Dhabi government. That being said, we independently are also rated as an investment grade company, and we have committed to remaining an investment grade company. What does that mean? We currently have about 2.3 times net debt to trailing last 12 months EBITDA. And in order to maintain our investment grade, we essentially would be looking at 4.5 times as the more or less the limit that we would be willing to push our net debt to EBITDA to in order to ensure that our investment grade does not get affected. So financial discipline, which is arguably this is the most significant measure to look at from a financial discipline perspective, ensuring that any growth isn't coming at the expense of financial discipline. We will maintain our investment grade rating on a standalone basis, something we've committed to publicly. Next slide, please. So what we also did, and again, you will find this in the public announcements that we've made as well, is that we are we came out with a more detailed breakdown of key steps we want to take before we hit on the way to the 2050 net zero. We set some goals on the ESG side for 2030. So as I mentioned, I'll expand a little bit more on the ESG side. So as you guys know, as I'm sure everyone's heard, we have so many issues coming up because of emissions, global emissions. We're starting to see effects of global warming and so on, and the ill effects of a lot of technology that's been deployed over the last many decades. So there is a very concerted effort both on a government level or around the world, as well as the corporate level, to try and address these. The UAE has officially stated that it wants to hit net zero by 2050 from a carbon footprint perspective. As I mentioned, TAQA being a significant player in the Abu Dhabi Inc., we obviously are taking lead from the government and following that route as well. On the way to 2050, what we've set are 2030 targets. The most significant targets are that at a group level, we will be looking to reduce emissions by 25%. And for the UAE perspective, particularly, it will be a reduction of 33% by 2030. Another very important component, and this would be more on the S side of ESG. No, please sit back. On the S side, as I mentioned, would be on the social side, is that we've committed to have females represent 30% of management positions by 2030. You will find other details in this slide, as well as the announcements we put out, but these two arguably are amongst the most significant ones we've committed to, most explicit numbers we've given out. Next slide, please. So this slide gives you visually something I've addressed before in the beginning. We currently stand about roughly 25 gigawatts capacity. Keep in mind that this is consolidated capacity. TAQA owns 60% of all plants, all generation plants in Abu Dhabi's generation plants, I should say. And we actually have first refusal rights for the same 60% for any plants that are being set up over the next several years. The only thing we're not part of, and there is no indication that we will be part of, is the nuclear power generation. That's not something that we're part of. So what we're looking to do is double capacity, gross capacity from 25 to about 50 gigawatts, looking to increase our share of renewables from roughly 10% today to over 30%. And then water will shift quite heavily towards reverse osmosis. A very interesting aspect to think about is that today, the plants that are way that they're set up, we have power and water generation combined in single plants. But as we decommission these plants and move towards green means of generation, you will have solar plants separated out, and you will have reverse osmosis plants separated out. Again, very important thing to hear, because it's an important question that we get from investors, is that we will not see any ill impact on the UAE side in particular on our returns, because again, whether we're using thermal or whether we're moving towards greener measures of generating water and or electricity, we will get paid on availability rather than on capacity take up. Next slide, please. So this is something, again, that you need to keep an eye out on, because we're expecting this news to further develop before the end of the year. Last year, well, let me take a step back again. What was happening was that you basically had two key entities that were focusing on renewables, both in the country and outside, from within Abu Dhabi Inc. This was TAQA, of course, and Mastar, which is, of course, was up until recently owned 100% by Mubadala. So what the government has decided to do, and of course, ADNOC was also getting involved in this space in select measures. So what the government has decided to do is, in essence, create a champion in this renewable space. And what has happened is that Mastar, excluding its real estate components, all the renewable components are now being combined TAQA will be 43% owner. So we're the largest owner. We will be the biggest driver of the board, and we will in essence be the main driver of this entity, followed by Mubadala at 33% and ADNOC at 24%. There is also a hydrogen-based JV where ADNOC will take the lead. TAQA will be 24%, Mubadala will be 30%. This is a very significant development for several reasons. Firstly, this will bring about 10 to 11 gigawatts of capacity to TAQA's portfolio instantly as soon as this transaction is closed. We're expecting to have this transaction closed before the end of the year. But naturally, you just need to keep an eye out for the actual news to come through. So what it will do is it will substantially increase our portfolio. So first things first, in the target towards 50 gigawatts, we're going to jump towards a significant portion of it. Secondly, this combination will instantly take us above the target we have, the renewables target we have for 2030. So what you will probably see is that not too far after this announcement, we probably will come out with revised targets for 2030 compared to what we have before. This entity, the Masdar one, is going to be the primary vehicle for any renewable focused expansions outside the UAE. Inside the UAE, any move towards renewables from thermal plants, we still have the 60% stake to be done through TAQA, but any expansion goes out through Masdar. Masdar actually currently is already in around 30 countries or so, and it has very aggressive expansion plans, even as it stands today. I can't share those because they're not public, but suffice to say that those growth plans will have a material impact on the overall target that TAQA will have. So again, as you're doing your homework, as you're doing your work, you need to keep an eye out on this particular news item and any related data that comes through with it, which you should see more and more information come over the first quarter. Next slide, please. No, go back. Yeah, so this kind of gives you visually again what will happen to the portfolio, to TAQA's portfolio once Masdar transaction is closed. So we will go from our 25 gigawatts to about 34 gigawatts roughly. There is one plant, the first solar plant that we have in the UAE is actually already a JV between TAQA and Masdar, so which is why this 1.5 is being adjusted. But you can see that we're jumping from 25 to a significantly higher number towards the 50. So naturally, the 50 becomes, and needless to say, the 50 gigawatt target becomes a little bit of an undershot if we don't change it. So you will see that change come through and that push come through over in the coming weeks, coming months. Next slide, please. So what does this all mean? In terms of numbers, we've had a very, very strong 9 months for the 2022 up till now. Of course, the oil and gas prices where they are have been a significant help for this. We've had double-digit growth, about 14% in revenues year over year for the 9 months. Over 9 months, EBITDA has grown slightly better at 15.5%. Again, the higher oil and gas prices in particular have helped improve EBITDA margins for the oil and gas business in particular. When you go to our website, you will find the 9 months results presentation, which will give you more details, more breakdowns of these. Or alternatively, better for you is looking at the MD&A, because that will give you a more granular breakdown of our business lines and how the performance has been. Net income, as I mentioned before, because below the EBITDA line, the costs have been non-operational costs have been very well controlled. In fact, even our net financing cost has come down because of a decrease in leverage. So our net income jumped by about 53% year over year for the 9 months 2022. And our cash flow generation continues to be extremely strong, jumping about 13% as well. So the business has been firing on all cylinders. It's been doing really well. We are, of course, a natural question is what happens if the oil and gas price declines? But we are in process of hedging a reasonable portion of the oil and gas business, which should help ensure that our strong numbers continue next year. That being said, of course, we have a certain view on oil and gas. One of the key things, in fact, which you will find also in our announcements, is that there was a strategic review done recently on whether TAQA should retain the oil and gas business or not. And the board decided after quite a bit of deliberation that we should retain it. And one of the reasons is because there's a view internally that while historically we've seen high oil and gas prices associated with a significant uptick in capex from oil and gas companies, but this time around it's a little different because of the increasing focus on renewables, because of the focus on ESG, the wish to move away from carbon generating procedures. There's been less spending on the traditional oil and gas side. So we think there is a possibility, internal view, that the higher prices could sustain longer than perhaps people are expecting, and that too played a role in the decision to retain the business. Nonetheless, as I said, there's a reasonable, we haven't given out the percentage yet, but there's a reasonable portion of the oil and gas business that's being hedged. So basically your current prices are being locked in, and that should give us, I think once we get to our target, we will probably come out and announce what percentage is hedged and around what prices as well. But suffice to say that a significant portion of the business will be hedged or is hedged already as we speak. Next slide, please.
So I believe that is pretty much it. If there's something else you'd like to cover, by all means,
I mean, no, this was more meant to be an introduction. I know TAQA is quite a big monstrous entity. I myself have just gone through a very similar exercise what a lot of the students will go through. So having joined less than a little over a month ago, sorry, I too have been getting up to speed with the company quite quickly. I mean, what I would suggest is that the disclosures are quite reasonable. So if you go to our website, you go to the ADX website, you will find the quarterly financials disclosing quite a bit. Beyond that, I suppose, I'm sure the students will have many questions. Perhaps I think it's going to be inevitable to have another session just to answer questions at some point.
Sure, yeah. So first and foremost, Mr. Asjad, would like to thank you so much on behalf of TAQA for being here with us today. You've been very kind to spare this half an hour to give us this very insightful presentation. Just to offer students a guide on what is expected next. By the 18th of December, there is a deadline to submit all your questions. Of course, these questions are going to be filtered for basically redundancies and appropriateness. When I say appropriateness, meaning if there's a question that would be perceived to be asking material, non-public information, that would be taken out. If there's a question that's overlapping with another question, that too would be taken out. Or if there is a question that could be very easily answered from public sources, that too would be taken out because that would be expected to be part of the deliverables of the research challenge. If anyone has any questions for Mr. Asjad, you can just very briefly ask right now, otherwise we'll just proceed to the remainder of this presentation. I'll just give a minute to whoever wants to ask a question. Anyone? All right. I guess that is pretty much it on the subject company side. What we will do after this presentation, after the kickoff meeting is over, we'll be sending you these slides for your reference as well, along with other resources. Now allow us to proceed with Dr. Mohsen for the rules overview.
Thank you, gentlemen. Thank you as well, Mark, everybody. So with that, in terms, there is not much new here that you do not know already. Each team, so a little bit of a general overview on the rules. Each team, 3 to 5 students, can be undergraduate, can be graduate. You must be meaning graduate, meaning not an alumni, but rather a student in graduate programs. You must be enrolled in the university when this is happening. You may not contact the subject company. That's important for us outside the organized event. So we're going to organize an event where you have the opportunity to be able to ask your questions, and you are not supposed to receive any help from any professional that would be violation of the code of ethics. The faculty mentors and as well the mentor, the practitioner may not contact the company. And it's important that the mentors do not provide any information that is deemed non-public, because that will not level, that will make the field of competition unleveled and unfair. I'm sure you know, but there are guidelines on set by the CFA Institute on how you submit your reports. So there are details, and you're expected to abide by these details. You're also expected to abide by any general rules on ethics and professional conduct. Mark, please. Okay, a little bit of advice for the faculty advisor, and then next to the industry mentor. For the faculty advisor, they are supposed to help you throughout by providing you insight and guidance. That's the whole idea. That's the objective, helping you through it. A maximum of 10 hours. If the faculty starts putting more than a maximum of 10 hours, then they perhaps seem to be doing more than what they're supposed to do. It's important you can have access to the faculty's work and to the research challenge documentation, but it's important that the work is yours, not the faculty's. Same thing applies for the mentor, a maximum of 6 hours. So if you put the two, a total of 16 hours of mentorship is taking place. Can be face-to-face, can be virtual, we leave it to you. But the important one thing that you could do is you could ask your industry mentor to review the first draft for you. And that's important. It's important to send them with your draft and then receive some feedback, upon which you make it, you revise and make your work better. Next slide, please. A bit of do's and don'ts for the faculty who are generous to be with us today. I think it's a great idea if you provide the past winning reports to the teams. It shows what the standards are. They learn from the writing style and from the different methods of valuations that they can apply. It's also useful to share some of the best practices out there. You can act as the devil's advocate in the sense of you can challenge what the students are doing. Encourage students to submit early on is a good idea, and make them practice is together is great. There will be, it is always advisable that there are some examples of valuation methods and models that are made available to the students so that they can actually try to learn from. Things you don't want to do, you don't want to allow plagiarism. You don't want to, the typical problems that we face in any group setting is someone will take a free ride, taking advantage of their colleagues. So we're not going to have tolerance for this. We're not going to influence a decision that the students reach, and we're not going to dictate one way of a decision should look like. Leave the space for the students to reach their own recommendation. Those are the things for the do not do for the faculty advisor. As for the students themselves, it's a challenging to be able to pull very high quality work on which you're supposed to compete locally and internationally while exams are taking place. But from my experience, it is those who are busy are the same people who are able to do the best jobs because of ability to manage their time. You have to be brutal in your time. You don't allow anything time to be wasted. You're working all around. Put a schedule. Make it clear on who does what. Give those who are good at one thing, let them do it. And those who are good at another, they do that other task. Require a high standard because you're going to compete against others, but also to prove to yourself that you're capable of producing quality work that you have not necessarily produced during college times. Know your numbers, have an analytical mind. You will be questions, understand the logic, verify assumptions, do sensitivity analysis, and most importantly, act fairly to your team members and to the remaining teams, and ethically. In the end, you're going to be working within a team. You can lead, but you can dictate, and as such, you can become hopefully a great team member. Things you don't want to do, you don't want to take this lightly. It's not a light challenge. You're competing at the national level, so you expect a high standards from you. Do not undermine your own thoughts. If you're convinced and you're able to defend your narrative, your story, then go for it. Do not perform, try to go deeper into whatever you are trying to say, because in the end, you are going to engage in a convincing argumentations. Do not delay schedules, don't go without rehearsals. And the last point is do not cheat, do not seek help and that is unauthorized. Any body, any report that seems to have received help throughout the throughout the process, there is the right for us and the institute to seek verification steps into how this work was produced and whom, just to verify that the work is entirely made by the students themselves. So I'd like to stress this point, make sure that the work is yours and make sure that your work is ethically and have not received unauthorized help. Mark, please. So the report, the report, the write-up of what you will be submitting will be scored based on the following items: business description 5%, industry overview and competitive positioning 10%, investment summary 15, valuation and financial analysis each 20%, totaling to a 40%, investment risks 15% and ESG 15%. Add all of this up, and then you reach the 100%. I was gonna say, basically, don't try to target one section with bigger remarks. I think those who want to win have to hit every section to the best they can. As for the presentation, it is also graded separately based on the following rubric. There is points associated with different items or different sections, and those are financial analysis, valuation, presentation, ESG, Q&A, teamwork, team involvement, and materials. And they add up to 100. It's extremely important that you rehearse even the manners of presentation, how to deliver to your teammate, or how to introduce, and so things that are not necessarily just content, but also into the what makes a great presentation. I strongly advise you to get trained in that area before you actually stand before the judges. So this is for the presentation scores. Mark, please. And
Thank you so much, Dr. Marcel.
Welcome.
So just to walk you guys on the upcoming steps ahead. One will be having organized trainings for you guys on two specific areas. One would be equity valuation and financial modeling. That would be taking place on the 10th and 11th of December in the format of a live webinar that will be delivered by Kaplan Professional Middle East, which is the partner of Kaplan Schweizer. I'm sure you might have heard of them. They're one of the world's leading education providers or training course providers. Well, it's important to explain why did we pick weekends to deliver sessions or to deliver trainings. Reason being, students are usually busy throughout the week with their regular courses, midterms, exams. So if we want to deliver something meaningful, we need to increase the probability of attendance. And that is usually on weekends. And this is also based on feedback that we've been receiving in previous research challenges as well. That being said, I highly recommend that you attend, because if you don't, you'll miss out on the live experience and the possibility of asking questions and receiving your answers. However, we will be recording all these sessions and sending them to you on email to watch as per your convenience. The second area where we will be delivering a training that would be with PwC Academy in the Middle East. That session will be on soft skills and presentation. So basically, the training provider will show you how should you present, how should you present cohesively as a team, because that's also important. How should you answer questions and answers, and will give you feedback on your body language. And we've made it specific to them that this will be in the context of an equity research report. So it's not just presenting about a random topic or so. That will be taking place on the 17th of February. So that would be after you submit your written report, final written report. So it's going to be in the period whereby you're working on your presentation, you're rehearsing, so you'll be receiving a training on that same topic and delivering your final presentation on the 26th of Feb, basically 10 days later. Next steps ahead, please visit the CFA Institute research website. You'll find the previous material of past competitions. You can watch the videos as well, download the reports, understand what you're up against. An important point would be you guys have received an email on the registration of your respective teams from CFA Society Emirates. Please ensure that you complete your registration, because only then you'll be receiving access to important content and announcements. One of them being the Refinitiv access, which you'll probably be relying heavily on to download or acquire the information you need as part of the challenge. What you'll also be receiving are 2 emails, one email today or tomorrow at the maximum, whereby we send you the recorded session of this meeting, and we'll send you a PDF version of this presentation, and we'll send you any important link that we believe is relevant for your research. Please start now. Don't waste any extra day to kick off your research challenge. It's not going to be easy, and it's going to need your 100% focus. We'll also be sending you an email with regards to the upcoming training sessions. These 2 on the 10th and 11th are going to be from 10 a.m. to 4 p.m. They're going to take you through equity research, financial modeling, how to download your data, how to build a model using the data you've downloaded, and they're going to help you basically answer any question you may have. So that's very important. Now that is done, please let me know if you have any questions. I see a comment here. Yeah, that's just my colleague sharing with you the website for the research challenge. If you have any questions, by all means, please let me know. You can also open your mic and speak out. That is okay. Anyone? Any questions from faculty advisors? Any questions from, yeah, I see one here. Clear so far, great. So my humble advice here, don't let this stress you out, right? Enjoy the journey. You remember you're here volunteering for this. It's not an obligation. It's not part of your undergrad program. You're going to graduate anyway, so just enjoy the journey. One question. Yeah. Is there any part?
Okay, you go.
Okay. Is there any particular financial modeling that is supposed to be used, or is it at the discretion of the team? Well, I mean, if let's say the company produces regular dividends, you can use dividend discount model. For the most part, you're going to be probably using the DCF, a discounted cash flow model. But again, that is up to you. Whatever you use, or even comparables, whatever it is, you're going to need to back it up. So that's the important thing. And you can also ask this important question. So I believe I've given an answer, and that is, it's up to you. You can ask this question as part of the training session that you'll be receiving on the 10th and 11th. Maybe they'll suggest something, but it's very critical to note, regardless of the training that will be happening on the 10th and 11th, the work will be 100% yours. So they will not be doing the modeling or the research report when we'll have this, just to give you an idea about the know-how. Hope you've answered your question. Someone raised their hand. I'm sorry, can you type so that?
Yeah, hi. Good evening. Sorry, good afternoon.
Good evening.
So you said that there were some restrictions regarding the faculty mentor, but are there any restrictions with the industry mentor? Like, how many meetings can you have with him? How many hours can you spend with the industry mentor? Like, is there any restriction on that aspect?
So there is a limit of 6 hours. Now, I think 6 hours are more than enough. And that 6 hours are excluding the time that the industry mentor will be taking to review your draft of the written report. Because think about it this way, if the industry mentor spends, let's say, 12 hours, as in not like not a day that they show up for an hour and they leave, no, full 12 hours back to back. If they spend that much, that's pretty much them doing the work for you. So that's where that logic of limiting the amount of hours is stemming from. So it's 10 hours for the faculty advisor, and I think that's more than enough. And then you have the 6 hours of the industry mentor. For the most part, as a team, you guys are going to be interacting with each other more than anything else. I hope I've answered your question.
Right, perfect. Thank you so much.
Yeah. Another question, do we have to use a specific software or program for the analysis, or is everything free for us to use? Well, everything free in that sense, of course, like everything that's unpaid for, that is a public source, then by all means, please feel free to use it. You'll also be receiving access to Refinitiv, which is a paid for software. So that is a great opportunity. You can definitely rely on that. The advantage of using something like Refinitiv or FactSet or Bloomberg, maybe you have Bloomberg access in your university. In AOS, we did have that, so we relied upon it heavily, is that it gives you the information up to date, reviewed, and it's in a structured manner. But you're free to get your own raw materials, quote unquote, in the manner you see fit. Hope I've answered your question. Anyone else? Is there a standard we have to stick by? For example, using a specific program which is credible. A standard as in a standard template for the report, or for a program as in something to use to download your material, which is your, let's say, ratios and your revenues and your historical data. Can you just clarify that?
I mean, a standard in terms of the applications we're going to be using for analytics. So for example, if I'm doing a research, from what I know, I should use SPSS, but nothing else, because there's a standard in that field. But just for this competition, is there any standard in terms of what software we use, or is it just anything that gets the job done?
No, it's anything that basically gets the job done. For the most part, let's say it's a DCF valuations model that you're going to be running, it's going to be for the most part manually done by you. I run my own DCFs, and it's for the most part manual. I didn't have a software that would help me run it for me, for example. So for the most part, it's going to be manual. You can have the ratios just to discuss, let's say, the debt situation for the company, the profitability, but it all boils down to how much you're going to value the company to get a target price. And based on that target price, you're going to give a recommendation. Does that help?
Yeah, thank you.
All right, cool. Anyone else? Anyone else? Any other questions? Actually, before I think Mr. Asjad is here with us. So thank you so much for not dropping out. Actually, if you have any questions for Mr. Asjad, I'd appreciate if you keep it a little brief because we're past our time. But if you have one last question, please, present it forth ASAP. Anyone? That's all. All right, ladies and gentlemen, thank you so much for being with us today. On behalf of CFA Society Emirates and the CFA Institute, I'd like to thank you all for participating in the research challenge. We wish you all the best of luck. On your behalf as well, I'd like to thank Mr. Asjad Yahya so much for being with us today, for sparing that precious time to give us this very insightful presentation. Looking forward to your questions, results, and findings. If you have any questions, by all means, you have my email. If you need my phone number as well, happy to share that. The next event would be the trainings upcoming on the 10th and 11th. Following that would be the deadline for submitting the questions to the subject company. Have a great evening. Please take care, and thank you very much again.
Thank you so much for the presentation. The seminar was wonderful.
Thank you.